Equities continued their push higher, stronger than ever, seeing more momentum carry us outside of the levels before the pandemic, and equities right now seem to be on a speed train higher, targeting those all-time highs from February 20th in the E-minis. We're less than 200 points away. What seemed like almost something that we couldn't eclipse this year now seems like, when will we get there? In the next week or in the next 2 weeks? It seems very attainable, especially if the numbers keep coming the way they have. The jobs number today obviously propelling equities. The fact that the Fed's still involved despite the economy's opening up, that will keep equities going. Right now, it just seems like there is a major push higher, sort of that nowhere else to go type of attitude, despite the fact that we've seen Treasury yields creep a little bit higher. The focus remains on equities. And right now, they are continuing at 3,200 near the close today. And that's going to kind of be setting the tone for next week ahead of the Fed meeting. And if you look at the VIX index, yeah, it's at its lowest since before the pandemic. So it's almost like we erased the whole thing. As equities have climbed, there's been no fear of a pullback. And after today's number, I don't think we're going to see any short-term fears of any type of a pullback. Obviously, the Fed can change that very quickly, but certainly the VIX index reading is telling us there's no fear priced into this market. Why not? We've seen this thing rally after a huge sell-off in March. We've only seen it rally very strong with one or two hiccups in there. So look for the VIX index to continue to decline as equity indices rise. And lastly, ahead next week, we've got that June FOMC meeting. What will the Fed tell us? Will they be backing off some of their policies? Because that is something that has propelled the market higher. Likewise, we do see Treasury yields, although only up slightly, at their highest since mid-March. And this point, that may start to steal some of the thunder from the equity market. Some of those more risk-averse investors may look to take some of their money out of the equity markets, put it into bonds. But at this point, can we see a sustained type of trade with this positive data? Will the jobs number be the first, or will of many better numbers, or will it be one of those that we see and then we have to kind of wait a few weeks to see another bright spot? So at this point, those are all questions that we need answered. The focus next week will be on the Fed, and Mr. Powell has to say at his press conference. But at this point, it is smooth sailing for equities, hitting 3,200 today, on their way likely to the all-time high, which is not far off.